This video is for general informational purposes only and does not constitute legal or tax advice. Tax rules can change, and individual situations vary. Missing a tax deadline might seem like a small mistake, but in the UK, it can cost you hundreds or even thousands of pounds in penalties. And it happens faster than most people expect. So what actually happens if you miss a tax deadline? In this video, we'll break down exactly what happens step by step. From the first missed deadline, to the penalties that build up over time. And later, we'll show how a small delay can quickly turn into a serious financial problem. Let's start with the most common situation. You miss the self-assessment tax return deadline. In the UK, this is typically the 31st of January. The moment you miss it, you're immediately issued a £100 fixed penalty, even if you don't owe any tax. If your tax return is still not submitted after 3 months, daily penalties begin. You can be charged £10 per day, up to a maximum of £900. This is where small delays start becoming expensive. At the 6-month mark, things get worse. You may face an additional penalty of £300, or 5% of the tax owed, whichever is higher. If you still haven't submitted your return after 12 months, another penalty is added, again, £300 or 5% of the tax owed. And in serious cases, penalties can go even higher. And that's just for filing late. If you also fail to pay your tax bill on time, additional penalties apply. You may be charged 5% after 30 days, another 5% after 6 months. On top of penalties, interest is also charged on unpaid tax. This means the longer you delay, the more you owe, even if you eventually pay everything. Imagine this: you owe £1,000 in tax, and you delay filing and payment for a year. By the time everything is added up, penalties and interest could significantly increase what you owe. What started as a manageable bill becomes much harder to deal with. So why do people miss tax deadlines? Common reasons include forgetting the date, poor record keeping, or simply underestimating how long it takes to complete a tax return. The good news is, missing a tax deadline is completely avoidable. Simple steps include setting reminders, keeping records organized, and starting your tax return early. For many people, getting professional help can also reduce the risk significantly. In the UK, tax deadlines are enforced by Revenue and Customs, and penalties are applied automatically in many cases. Which means missing deadlines can have real financial consequences. The key takeaway is simple: missing a tax deadline isn't just a small mistake. It can quickly become an expensive one. The earlier you act, the easier it is to avoid penalties. But here's something most people don't realize: even small amounts of extra income can trigger tax obligations. So the real question is, are you handling your side income correctly? In the next video, we break down exactly how side hustles are taxed in the UK, including when you need to declare income, what you can earn tax-free, and how to avoid unexpected bills. So if you want to understand tax and money simply explained, subscribe to the channel and watch the next video.